You know, when arguably the world's greatest investor makes a move that no one's ever seen before, well, you've got to pay attention. So today, that's exactly what we're going to do. We're going to decode Warren Buffett's big 2026 warning and what it could mean for your portfolio. Let's jump right in. So let's start with just one number, and it's a massive one, $381.7 billion. That is the record-shattering amount of cash that Warren Buffett's company, Berkshire Hathaway, is sitting on right now. And that really brings us to the central mystery we're going to solve today. Why? Why is the guy who's famous for buying and holding amazing companies suddenly choosing to just sit on a literal mountain of cash instead? It's a huge red flag, and we are going to unpack it. Okay, so here's how we're going to break it all down. First up, we'll get into the mystery of that billion-dollar cash pile. Then we're going to decode the warning sign that Buffett is clearly seeing. After that, we'll dive into a three-part action plan based on his strategy. And then we'll wrap it all up with a simple playbook that you can use for your own investments. All right, let's get right to it. Section 1, Buffett's billion-dollar mystery. We're talking about how this record pile of cash is so much more than just saving for a rainy day. It's a very deliberate signal to all of us. Now, what's so wild here is just the sheer scale of it. Take a look at this chart. Berkshire has always kept some cash on hand. That's normal. But just look at that difference. The previous record peak was around $150 billion. Today's position, that's the big bar, is more than double that. This isn't just some small increase, it is a massive strategic shift. Which brings us right to our second section, decoding the market's warning. See, to really get why Buffett's doing this, we need to look at the market through his eyes. And that means focusing on one key metric that he watches very, very closely. And that metric is called the Shiller CAPE Ratio. Now, I know it sounds super complicated, but just think of it like a price tag for the entire stock market. It's a simple way to see if the market as a whole is cheap, priced fairly, or way, way too expensive. And this is the clue. This is the smoking gun. Right now, that price tag is reading 39.42. To put that into perspective for you, the historical average is somewhere around 17. The only other time it has ever been higher was at the absolute peak of the dot-com bubble in 2000, right before that massive crash. So the point is this: Buffett sees a market that looks dangerously expensive, and he's getting prepared for a correction. So, what does this all mean for us? Well, let's move to our first action step, and it's a big one. Don't sell everything. Just because Buffett is being cautious, it does not mean he's hitting the panic button. This is a warning, not a signal to run for the hills. Look, even if a big market drop is on the horizon, trying to time it perfectly is, well, it's pretty much impossible. If you sell everything today, you could so easily miss out on a huge rebound. And Buffett knows this better than anyone. His strategy is all about being defensive, not about abandoning the game entirely. And this slide right here illustrates that point perfectly. Just look at this breakdown of Berkshire's portfolio. Yeah, you can see that enormous slice for cash, but look at the other part. He is still holding over $267 billion in stocks. He's not out of the market, not even close. He's just adjusting the balance, which shows he still has incredible faith in the long-term power of owning great businesses. In fact, while he's sold more stock than he's bought for 12 quarters in a row, his moves are really surgical. For instance, he recently trimmed his position in Apple, but Berkshire still holds over $60 billion worth of it. He's reducing his risk. He's not getting rid of his best ideas. And this leads us right into our second action, hunt for value. Think about it this way. Just because everything at the mall seems expensive doesn't mean you can't find an amazing deal in one or two of the stores. This is such a crucial takeaway. An overvalued market is not the same thing as an overvalued company. Your goal is to look past all the noise and the high prices and find those individual, fantastic businesses that are still trading at a fair price. This is one of his most famous, most timeless pieces of advice, and he wrote it way back in 1989. It's far better to buy a wonderful company at a fair price than a fair company at a wonderful price. He's always, always focused on the quality of the business first. And you know what? He's still putting his money where his mouth is. Even with the market this high, Berkshire has recently been buying. They've been adding to companies like Google's parent, Alphabet, the insurance giant Chubb, and even Domino's Pizza. The opportunities are definitely still out there if you just know where to look. And that brings us to the final piece of this whole puzzle and our third action: keep cash ready. This is what connects everything back to that record-breaking pile of money we started with. This is such a critical mindset shift. You have to stop thinking of holding cash as some defensive retreat. Instead, think of it as offensive preparation. You're stocking up on ammunition so you are ready to go when the market eventually puts great companies on sale. Having that cash on hand is so crucial, really for two main reasons. First, it protects you. It lets you handle personal emergencies without having to sell your investments at a terrible time. And second, from an investing standpoint, it allows you to be aggressive and act lightning fast when those wonderful companies suddenly go on discount. Okay, let's pull all of this together into your own investor action plan. We've decoded the warning, and now here is a simple 3-step playbook to help you navigate whatever might be coming our way. Here it is. It's really this simple. Step 1. Do not panic sell. Stay invested in the quality companies you already own. Step 2. Hunt for value. Always be on the lookout for wonderful businesses at fair prices, even right now. And step 3, keep cash ready. Be prepared to pounce when those golden opportunities finally show up. So we'll end on this thought. The world's most successful investor is patiently, strategically preparing for a future where great assets finally go on sale. The only question left is, are you?